Well, hello folks, I'm LA Little and this is your weekly NeoTA wrap. When we take a look at these markets, we do it from a neoclassical perspective. Each time we ask ourselves one question: what happened last week and what does it tell us about the coming ones? Do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's available there under a channel, LA Little. And so what happened last week? It was a big bounce. We've got a lot of volatility going on. Moves are larger than normal. 2.5%, 3% across the board here. And that brings the losses on the year back to something a little bit more normal. And so, it was kind of the bounce that one would expect, that we thought we'd see. Now it's a question of what do we do? The Fed is dead ahead in front of us. That's going to be the big catalyst that comes on Thursday this week, and you get earnings coming after that. So the setup is here for a larger move to take place. Let's take a look at the charts. And though I don't do this very often, what I'm going to do today is show you these charts from a classical TA perspective. And what you're going to probably see elsewhere is you're going to see people do this and do something like, I don't know, maybe this on the downside. And they're going to tell you that what you have is a rising wedge, or you've got a triangle pattern. And then you're going to hear that usually these patterns resolve to the downside, right? Continuation patterns. So in other words, you should expect this thing to break. Yeah, maybe. I don't know that I put much weight in this kind of analysis anymore. What I'd rather do is I'd rather look at that area that I know has resistance. I know that the sellers are going to be here. They've shown us that they're here. They showed us again this week that they're here. And I'd say, hey, if it can get over this and hold it, that tells me that we can drive to the next level, which is up here on the daily, which is this area on the daily. That's where the sellers will be sitting again. If they can't get over this area, they're going to find a way to get back down and test the bottom. Now, is the result the same? Sure. But the difference, the big difference, is if you put this wedge, this line, and we say, okay, price trades to here, does that mean the break has occurred? Are we going to see that move down? Well, I would say no, not necessarily, because if you look at that, is there anything here that's significant other than this arbitrary line you've drawn, right? Do we know that the supply and demand is going to be different at this price point? We don't know that. What we do know is supply and demand is different up here, and we know it's probably going to be different underneath this big bar down. So in other words, it's really not until we get to this price point, right about here, that we know that we're probably going to this one. Here, we don't know that. Up here, it's a little bit more clear, and if you drew the line this way, or if you drew it this way, right, yeah, that one actually works out. This one down here doesn't. So anyway, comparison, contrast, it's worth taking a look at these sometimes and asking ourselves that question. So which way is it going to break? Is there something that gives us that clue? And let's move to the weekly charts and think about it from there. So let's review where we're at and how we got here, right? We had this range set up. We had talked about this range underneath it could probably get triggered if we broke. It did, came down, tested these swing point lows and broke them. And then we talked about there being two more ranges to take us down below this, right, if in fact that did happen. We've gone to the bottom of the third range on the S&P 500 on the weekly chart. So in other words, we stayed for 6 months, 7 months up here in this top range, 90-point range. When we broke with force. We knew we would break with force, and we broke with quite a bit of force. And what did we do? We went right down to these swing point lows. When you get a break like that, the probabilities, because it was a break on multiple time frames, the probability, and it came after a long congestion. The probabilities are fairly high that you're going to get 2 to 3 bars continuation to the downside. You got exactly that, bar 1, bar 2, and bar 3 now. You're at the point now from a neoclassical standpoint that you actually could get the move back to the upside. So you've gotten the follow through that you expect. Now the question is do you drive back up, right, or do you drive back down? If you try to answer that question, right, we know in this particular case, and we're on the weekly, we know that this test, this is a bearish retest regenerate sequence. We're still testing multiple times now into that sequence. We also know, because there's 2 swing point lows here, that becomes a significant resistance point. And that's what you're seeing on the daily chart. You're seeing this area tested multiple times. Again, if it gets over this, in other words, if we can push up into this area here, right, is there anything here going to resist it? Not on this time frame. There's just nothing in the way until you get to the next set of swing points. That swing point low is here. The next one above it is there, right? And so you can start to get the feeling, and I'll draw these in. This area here looks rather significant. In other words, anything that pushes back up to that 2070 area is going to have a very hard time continuing. Matter of fact, anything that pushes up into this whole area is going to have a hard time continuing. That's the 2045 area. Now, if we take 2045 and we go back to our daily chart, so let me grab the daily chart again, and we come back here, where's 2045 on this chart? 2045 is the bearish retest regenerate starting about 2045 on the daily. As a matter of fact, you've got that area there we just talked about, so you can see that the overlap area on the S&P 500 from the 2 time frames off the breakdown is going to be this 2040 to 45 area, and it's going to be a tough spot to get over, or should be. Knowing that, we at least have our parameters on the upside as to what the difficult spot's going to be, and now we can use that knowledge in terms of any kind of trading plan. If we flip over the other way and ask ourselves what's significant on the downside, there we can see 2 things. We can see this big support area that's built up down here. It's the bottom of this wide price spread, heavy volume bar. Right, so let me draw a point into that one, and it's this wide price spread, heavy volume bar. So the congruent area between there, right, becomes significant on the downside. So your significance lies in 2 spots. It's up here and it's down there, and where are we? We're right in the middle. So you can view this multiple ways. You come up with about the same idea in all those ways, and that is that this market is set up to make a larger move. It doesn't have to do it now. We're only 3 bars into the breakdown, 2 bars bouncing basically. It could play out this way for 5, 6, 7 bars easily. In other words, we could be way out here somewhere before we get any kind of resolution one way or the other off this big bar down. So we've got a long way to go potentially. If we do get movement on the Fed that takes us above this zone or takes us back underneath this one, right, then we're going to see the test here, or we're probably going to see the test up there. That's where something significant takes place. Until then, we're just bouncing around. One more thing worth noting here, I've pointed this out to members this week. If you take the weekly view and you come off the top, you now have the potential for an ABCD down, because you've got a higher high this week and a higher low off the prior bar, which gives you that potential for the ABCD structure down. And as you can see, it would be a monster move down if in fact it starts to play out. So, be aware the potential is there for either case, and you actually have the structure potential if you break here to make a fairly large move to the downside. So don't be caught napping if in fact you see these break. You could get the larger move to the downside and certainly at least a test of those lows. That's the S&P. Now, most of the markets are not any different. You've got some that are stronger that are probably going to give us a hint earlier. So if I move over to the NDX, which is the strongest one, here we actually have a different situation, right? It's the same structure, it's just farther along in its reparation. You've got the swing point lows here, and so when you start asking where are we going to find some sort of an indication as to what's taking place, we actually did see that here. We saw the retest regen. It hit into this swing point low, was rejected, in other words tried to push back down, but it didn't do it. Right? The market did not do it last week, and when the market doesn't do what it should do, you have to start scratching your head and say, is there something else going on that we're not seeing? Taking that same argument we just talked about on the ABCD structure to the downside, you actually have an ABCD structure potential to the upside as well, and that would take you all the way back to the highs. When would you know that? Well, you have to look at what's significant and ask yourself, can it get over that area that's significant? This is the significant area. This is the retest regenerate on the daily NDX chart. If the NDX pushes above that area and holds it for a bar or two, right, then the odds of coming back to the top are fairly high. You'll have an ABCD structure supporting it. You will have gotten over the huge selling that you would expect in this area, and then you can make that push, right? There's not much else to stop it. So again, here's another way, to get an early warning system that this thing is going all the way back to the top, and that's a trade back over this area. And we're not talking small numbers. We're talking 44, almost 4,500, up to about 4687, 187 points. Do you want to take the trade here and expect it to make that move? Well, you can, but you've got to risk a decent amount, because what's significant here? If we do that classical thing that we just talked about, the classical people are going to be drawing something probably like this. And this one is actually a rising wedge that has a flat top, or almost a flat top. And when you have something like that, getting over this is not as hard, right? I mean, this thing can get over it, and if it does, then you can get the move back to the top side. I would rather not look at it that way. I'd rather ask myself what's significant. What is significant to me is not just that flat top. If it does get over, and if the sellers get swept up, right, and we get the move up, then we can make it to the top of the bar, and actually, to draw it in correctly, it's there. And then that would be where it's really significant, because if you can get over that, you're going to do two things. One, you're going to wipe out the bearish retest regenerate, which says, hey, trend no longer is this way, but trend is now more like this. In other words, if you get over this area, that's what this is telling you. You also will be coming into this first of the big three breakdown bars, and then that, of course, could give you the move up to the upside. So that's the daily. If you move it on the weekly, this one actually has that same structure we just talked about. It has the potential for a large ABCD down now, and it's not as large here, but it's certainly large. It would break this bar. Is there anything here that tells us anything? No, it's just three bars, and this one being stronger is not allowing it to move even lower. Recognize here, we never broke this swing point low. So even though we did break multiples and we got the 3 bars continuation, we didn't break the final set of swing point lows that were beginning of the year and hold them on the NDX. So we have the yin and the yang, really, when we look at the indexes and we look at them carefully. The one case, there is an argument to be made that this market could sell down off potentially even the Fed this week. You could make the argument that this market is going to continue to play out, for some period of time out here, and eventually make a break higher or make a break lower. You could make the argument that this thing is going to break down immediately. Which one holds more water? Well, if you look back at history, the one that holds more water is the one for the retest regenerate, and that would be the S&P 500, and that is for this thing to make it somehow all the way back up here and push into that area and then potentially get rejected there. If it did, and if that rejection held, then this whole area up here was distribution, and you really have some sort of a market top potentially. If you go back in history and you look at these things, what you'll see in history is that market tops take a long time to form. Most people seem to think that, you know, a market top is a crash off the highs and then you just keep coming down. You know, back before we had this breakdown over here, we were talking about this rolling, right? We were talking about this thing rolling over, right, and potentially breaking down. This topping pattern, in this case 7 months here, and if this really is a top and it trades even back up to here and then eventually breaks down, that pattern is going to take a significant amount of time, and usually that significant time is, you know, a year, year and a half even. So because we've already had 7 months distribution, if that's what it is, this pattern over here only needs to take 3 or 4 more months. And as I just said, we could easily get another 6-7 bars on the weekly on the right side, which would do what? It would take us to a point in time to where this has gone long enough to actually get the breakdown. So when you start thinking about it from that perspective, you know, October, November, when we should see the market move up, we may not see that this year if in fact this was a top. That's where the real test is going to come in most likely. October, November, December, when the market should have the strongest part of the year, then we're going to be focused on, are we up here or are we even up into this area? If not, that gives you more evidence that this is a major top and not just some sort of a pullback that took place. And if I pull over the monthly chart and look at it, you know, the key area here, of course, is for this thing to trend transition. If it does, right now you've got 2 swing point lows down here. They haven't been tested. Yeah, in other words, we haven't come down to this bar and tested it yet. That's the October lows. And if we haven't tested that, let me draw it incorrectly here. If we haven't tested that, right, this area is the key area. Because if you get under this low, right, that's significant evidence. Well, if you get under it and stay under it, I should say, that gives you significant evidence that the top is in place for 2 reasons. One is that this long bullish trend will have broken and will be sideways. These trends do not change very often. They usually change, you know, 60, 70 bars in. What is that? That's monthly bars. So we're talking about a good 5 years, maybe 6 years potentially, and that's what we've had. And so we're certainly long enough in the tooth here that we could have a major top. That major top doesn't mean you have to come all the way back to where you started, but usually it does come a long way back, you know, so we could see a significant pullback take place. And because we went up so far, right, the pullback here would be huge. You know, 1,400, 1,500. That's a big number from this 18, 1,900 that we're at now. This is the long-term potential. We don't have evidence yet that this is what's going to take place. That evidence would take place on this chart on a break of the swing point low, which was the October lows of last year. And if we go back to the weekly chart, you can see that here. What would that also be from a neoclassical perspective? That would be a break of multiple time frames. This time the weekly and the monthly. And when you get a weekly and a monthly break together, right, you can get a larger move, just like we were saying on the ABCD structure, and a more permanent move, a more permanent trend change, where your bias no longer can be just bullish, but in fact can be sideways to bearish on the long-term time frames. Okay? All right, so looking at this from a long-term perspective, I think the table's set, so to speak. You know, you have the potential to come back up as far as the bottom of this zone, which is about 2070. that would be the area that I would think that if you get over that, this wasn't distribution up here. You have the potential to actually break under this October low. If you were to do that and stay under it, especially on a monthly basis, right, then that would signal that a major top is in. We're in the middle of that, and we have the potential to simply go sideways here for quite some period of time, right? As high as up here, as low as down there, but still, well, actually as low as here, but still inside this big range that has set up now. So your lows, you know, parameter-wise, the area that you're interested in is really here, and that's a big area. Anything outside that area is going to be the next big tell on a long-term basis. Anything inside that area certainly is tradable if you fall back to the daily time frame, but doesn't mean a lot on the long-term view. And so your parameters are fairly set. 2070 about 18, what is this number, 18, it was almost 1900. Yeah, it's 1903. So you got 1903 up to about 2070. 170 points on the S&P. Big, wide range. Expect that range to be tested, traded in for some period of time, most likely. And that could go on for another 3-4 months easily. That's where we're at. That's where your view should be on a long-term perspective. And then on a shorter-term perspective, you can pull it in, you know, back to the daily chart, and you can trade these ranges down here that give you shorter-term trades that you can actually make. Just don't forget the long-term context. It doesn't mean anything until you get above those areas that we just looked at. I could look at the weekly charts, you know, elsewhere. There's really not much else that was told last week. Whether I go to the bonds, whether I go to the, you know, the dollar itself, whether I look at the overseas markets, you know, Asia's just bouncing. Europe bounced, is trying to work back down. You know, we've bounced, just moving around. There's not much else out there to tell you. And the only thing that was significant last week that gives us any kind of clue as to what might happen this week really was this inability on the failure here and on the NDX to see this market push back down. That gives us some idea that at least for now, the buyers are willing to step in at the current price levels. They're unwilling to sell it at the current price levels. Most of those that want to sell, they're up here. Most of those that want to buy, they're down here. In between, they're unwilling to do much of anything. And that is what we're seeing. You have to realize that's what's taking place. And that means that until you get something larger, you know, on either side, that actually, you know, creates, you know, more interest, you're just slopping around. And the slop in this case is big because of the size of the range that's been created. And so 2-3% a week isn't uncommon now. All right, that's it for this week. I'm going to leave it at that. I will be around all week. We'll have shows normal this week. We're back into the fall schedule almost here, so we'll see how this market wants to play out. You get the Fed on Thursday. Recognize it's a day later this week. That could give a larger move on Friday, and with the weekend in front of it, that makes Friday set up as a very potentially volatile day. Have a great one. Thanks for joining me. Tell a friend, tell two. I'm LA. This is and was your weekly NeoTA wrap. Good night.